lot of people don't really understand the way that the MicroStrategy trade is working. I'll use two words that the Wall Street Journal deemed too complex for their readers to understand, but it's accretive dilution. Essentially, what's happening with MicroStrategy is that he is accretively diluting his shareholders. I remember when the 21-21 program came out towards the end of last year. I remember looking at it that day. I mean, literally, he went live with a $21 billion ATM. An ATM is, I can sell shares into the market at any time. So essentially, he was live with a 40% dilution of his stock right away. I'm looking at this as someone who's looked at traditional financial markets for a very long time. Shit. What is the stock going to do on Monday? And I was fairly convinced we were going to have a down day, massive dilution. In the end, the stock did end up down on the day a small amount, but actually Bitcoin was down, and intraday his stock was up 2.5%. And I just literally, it blew my mind. I was like, there's something really that we're not thinking about here. What is happening? Why is the market telling us, that such a dilution is so positive? And it's back to those two words, accretive dilution. So how do we think about that? Okay, let's just say in very simple numbers, these are not the numbers, but just very simple numbers. What does MicroStrategy look like? So let's just say they have $30 of Bitcoin, right? And then the market cap is $100. Okay. So that's approximately a 2.5 times multiplier on the valuation. If they go and issue another $100 of stock and use that $100 of stock to buy Bitcoin, they suddenly have $130 of Bitcoin with a 200 market cap. They've taken the multiplier down to 1.75. Right. So if you look at it, that is accretive dilution. That is what I'm talking about when I say accretive dilution. It is adding value to the shareholder by increasing the amount of Bitcoin on the balance sheet versus the dollar market cap of the company. Now, if you think this through, you're like, well, okay, he should just keep selling and buying more Bitcoin, which is exactly what he did. Now, if he carried on doing this, then obviously the share price should just keep converging down to 1 times the multiplier. But let's just say that he goes even more aggressive than he currently is, and he pushes that multiplier all the way down to 1. So that means that he can no longer sell the stock at an accretive dilution level. Well, he's still got convertible bonds. And if you understand the way that convertible bonds work, he's essentially diluting his stock at a premium again. Let's say we take the MNAV, as we call it, the multiplier to the NAV, to 1, and then he starts issuing convertible bonds. Now, volatility is very high, and he piggybacks on the volatility of Bitcoin to be able to achieve much higher implied volatility pricing for his convertible bonds. In fact, his volatility is about 2 times the volatility of Bitcoin, which means even if he crushes the MNAV on the stock to 1, he can just keep going on the convertible bond at a higher premium and therefore accretively dilute his shareholders.